Welcome to Decision Vision, a podcast series focusing on critical business decisions. Brought to you by Brady Ware & Company. Brady Ware is a regional, full-service accounting and advisory firm that helps businesses and entrepreneurs make visions a reality.
And welcome to Decision Vision, a podcast giving you, the listener, clear vision to make great decisions. In each episode, we discuss the process of decision-making on a different topic from the business owner's or executive's perspective. We aren't necessarily telling you what to do, but we can put you in a position to make an informed decision on your own and understand when you might need help along the way. My name is Mike Blake, and I'm your host for today's program. I'm a director at Brady Ware & Company, a full-service accounting firm based in Dayton, Ohio, with offices in Dayton, Columbus, Ohio, Richmond, Indiana, and Alpharetta, Georgia, which is where we are recording today. Brady Ware is sponsoring this podcast. If you like this podcast, please subscribe on your favorite podcast aggregator, and please consider leaving a review of the podcast as well. So today we're going to talk about whether you should fire your accountant. And we are recording this podcast on lucky Friday the 13th of March in 2020, which means that in the accounting world, we are in the heart of what is known as busy season, which may or may not be extended depending on what the IRS decides to do in response to coronavirus. But this is the time when the relationship between the accountant and the client is at its most intense, at least for most clients. And, you know, for good or ill, in many cases, clients talk to their accountants pretty much only this time of year, and we can have a discussion at some point later as to whether or not that's a good thing or the prudent thing. But this is the time of year when things get tense. Things pop up on the tax return that the client wasn't necessarily expecting, when phone calls and emails are not returned as quickly as they are through the rest of the year because there's a traffic jam. And so the most strain is put on that accountant-client relationship. And, you know, at some point as a client, you may start thinking about, well, you know, is this relationship really working for me? Should I be looking elsewhere? Or is this just kind of the nature of the business, and is what I'm experiencing something that I would likely get from somebody else if I switched, and I should just sort of leave well enough alone? So I hope that you will find it as a timely topic. And if you've listened to a podcast from a few weeks ago, we did one on should we fire a lawyer? So this is an equal opportunity podcast. We'll have should we fire your financial advisor? Should we fire your gardener? Should we fire your Uber driver? Should you fire the person that mows your lawn? So we'll go through all kinds of firing kinds of podcasts. But today we're talking about accounting, and even though I work for an accounting firm, I am not an accountant. If I talk anything about accounting, it's instantly malpractice. So joining us today to help us talk about accountants and relationships with our accountants is my longtime friend, Brian Woodman of Woodman Associates. We go back a long way, at least 10 years. Woodman Associates is a professional accounting services firm specializing in CFO services, financial reporting, audit support services, and internal accounting assistance, all typically on a project basis for small and mid-sized businesses. Brian is a senior financial leader with 18 years of proven technical and financial management expertise with a focus on middle market technology, services and manufacturing and distribution businesses from startup to $1 billion in revenue. He has proven expertise in leading internal and external finance and accounting-based projects and teams, business and accounting process development and review, and financial reporting research and implementation expertise under U.S. GAAP. He is a CPA licensed in Georgia, all-around good egg, and sporting these brand-new glasses that I just can't take my eyes off of. Brian Woodman, welcome to the program.
Oh, thank you, Mike. You reading that makes me sound like I'm bragging. So I've never had that read back to me in my bio. So I'm a little embarrassed, but
well, but
some of the intro.
Some of it's true, right?
Yes.
You know, it's interesting. You mentioned that. I hate having my bio read as well. When I do speaking gigs and so forth, and I do want to sort of put my hands over my ears like this. It's like, yeah. I'm sorry, my marketing people made me write that. I'm really a bad guy. So
no worries.
Let's jump into this. And I'm having you on the program for a lot of reasons, but your expertise is that you've been in the CPA role, right? You grew up as an auditor,
Yes.
right?
Yeah.
And in public accounting, and now you're in a position where you're doing some accounting work, but I think you're also coordinating who your clients hire and work with to
Correct.
get sort of the bulk work done, right?
Yes.
So
Yeah.
you are sort of a kingmaker, right? And if you decide that that somebody needs to be voted off the island, you're going to tell the client, and more often than not, they're going to do what you tell them, because why pay for your advice if you're not going to follow it?
Right. Yeah. I've been on both sides at this point. On the service provider side, I was an auditor for many years. So I know what makes clients happy and what makes them upset.
Right. So,
it's good for me to have that on the other side to help my client make the right decision about which service provider to pick.
Yeah.
So,
I mean, how often do clients make a change? Are clients kind of always looking for a reason to fire their CPA, or do they tend to come to that decision after a lot of thought?
Well, I think entering a relationship with an accountant is a very thoughtful process. So, especially with small business, your business is tied to your personal life in many cases. So business is personal. So you're sharing your intimate financial details with someone. So in most cases, at least for small businesses, it's a somewhat personal decision, and you want to find someone that you trust. So you put a lot of thought into that. So the intent is to go into that relationship to last. So I would say, how often, do clients look to change their accountants? I would say they're not looking to necessarily change their accountants unless they have to. So I would say not often.
Okay.
Yeah.
So when you come to that decision and you're advising, what are the most frequent reasons that clients do decide they're going to change accountants?
Well, let's see. There's a few. Price, unmet expectations. Some of the reasons where it's not really a choice is if there's a change in control of the company, or a change, like with larger companies, a change in the C-suite.
Right.
So they may kind of bring their own accountants along, or advisors. I mean, so when we define accountant, that could mean several different things. There's, there's compliance related work, which is, tax returns and audits. And then there's more advisory work. So it kind of depends on who you're talking about. But, I would say so I was in audit, so I know that best. So if it's an auditor and you've got a new CFO in place, it's possible that the CFO kind of brings in the firm that they've known, depending on where the company is at any time. So, so change of control, if an acquisition takes place, so, a foreign parent buys a U.S. sub, there could be a reason to change the accounting relationship there. I think I mentioned price, although it's not always the best reason to change. Oftentimes clients or companies are required to go out and bid the work out just to make sure they're still in range. And oftentimes the change occurs just through that process. Other reasons, a company can grow and kind of outgrow the depth of their current, single shop, you could say. And it may require more depth and expertise in a specific area. So they may have to go and find a firm that can meet their needs there.
Yeah, I just had a conversation. I do office hours in Alpharetta, Georgia, an organization called Tech Alpharetta, twice a month. And last Wednesday, somebody came in and started talking about research and development tax credits.
Sure.
And I said, well, look, I have a passing familiarity with them, but I'm not an actual CPA. I don't even do my own tax returns. So, who's your accountant? He says, well, our accountant is just, sort of a guy that we decided to go with because he was the cheapest. And I said, well, maybe for research and development tax credits, you need more than just some guy, right? and that is a case where the complexity of what that client needs outgrows kind of
right.
the single shingle that for certain areas may be a fine accountant, right? But
right.
reaches a technical depth that just, you cannot reasonably expect unless that person just happened to be an R&D tax expert at a bigger firm that just did that.
And that is the case. So I hope it doesn't sound like I'm knocking single shingle.
You're not.
It's just that the single shingle can't do everything to the depth that a large national firm could probably do. But you may have a boutique shop or a single shingle that may fit your specific need, and that might be the right person.
Yep. So, and the interesting thing I just thought of, because you mentioned your audit background. When you have an auditor, I mean, firing an auditor is a little bit trickier, right? Because there's observers who are going to kind of wonder, well, why did you fire the auditor?
Yes.
Right? Did you fire the auditor because they legitimately did something from a business perspective that was not cool? Or was the auditor telling you to do something on your financial statements that was the right thing to do and you didn't want him to? And you found the equivalent of the brake inspector that says, for $20, we'll let those thin brake pads slide and I'll give you the sticker, right?
Right.
That's a real concern.
That's, you could call that opinion shopping.
Yep.
So I think that, I go back to my audit days. That was a specific question. We fill out all sorts of checklists as accountants as we go through and QC our work. And in the planning stage of an audit, there was a specific question about how many times has your client fired their accountants in the past, and what are the reasons, and take those into consideration, one, in accepting this client, and then two, if you're comfortable accepting the client, you need to potentially build that into the audit risk, which determines how deep you really need to go in an audit.
You know what? That's interesting. So as I mentioned at our intro, we did have a podcast talking about should I fire my attorney. We had Jeff Berman from Berman Fink Van Horn, and one of the things he talked about is attorneys are kind of reluctant to take on a client that rolls through other attorneys, right? Sends up some red flags.
Right.
I had not thought about that from the accounting perspective, but that's right. When accountants, for those of you who don't know, accountants have this process called client acceptance. At least most accounting firms do. And I think that's the checklist you're talking about, is should we accept this client or continue the client? And it hadn't occurred to me, but I guess on that checklist is, does this person make a habit of having a rotating, accountant merry-go-round, basically?
Right.
And you may, so if you kind of develop that reputation of being somebody that does that, you may find it at some point hard to find somebody good that wants to represent you.
That's right. The question's going to get asked eventually.
Yeah, sure. And I'm guessing another reason why firms change accountants too is because they receive an investment or even, just financing in general, right?
Right.
I know that VCs will often say, congratulations, here's the check. Here's also the accountant you're going to be working with, right?
Right. I have actually seen the name of a firm written into a loan agreement.
I was going to ask you about that. Does that work for banks as well?
I've seen it.
Okay.
I've seen it where, in order to get the funding. Now I'm trying to think if it was, it was a debt agreement. I don't know if it was with a bank.
Yeah.
But it did specifically name the firm that was to do the audit of the financial statements.
So it's conditional.
Yeah. So in order to get the debt, you may have to change your accounting firm.
Man, I got to find that lender and make sure they're my best friend. That sounds great.
So I've seen some that will say, it must be a national firm or a Big Four firm. But I've only once seen where it was the specific firm was named.
Yeah.
So I thought that was interesting.
Yeah. I haven't seen that either, but I've certainly seen it where as at a minimum, sort of as part of the term sheet, they say you're going to adopt whatever accounting firm we say you're going to adopt.
Yeah.
To be named later. So in your mind, as an advisor to clients that kind of coordinates the work of other accountants, what starts you down the road thinking, I'm not sure this is the right match, and maybe I'm going to tell the client to start looking at other alternatives?
I would say broadly, unmet expectations.
Like what?
Like on price. So I've often seen situations where, the bidding process, you've got the low bidder coming in, and then all it is coming in with a low price, subject to conditions that the client must meet. And if that fine print isn't read in detail and held to, you're going to see change orders. So for every little thing, so that allows the firm, to come in, get the work, but then on the back end, I don't know. That's, firms that kind of take that approach, I don't think that's a really good long-term approach to, to going out and generating business, because it kind of leaves a bad taste in the client's mouth.
Might generate business, but you won't keep it.
Yeah, that's right. Yeah. So I think you'll have high turnover in those situations. But as far as expectations go, last minute surprises, and I can talk about this from an audit perspective and from a tax perspective. You discussed the communication throughout the year. Why are we having the conversation, just before the deadline?
Right.
Why haven't we discussed these things? I mean, and I've been able, fortunately for me, so I'm sitting on the other side of the table now, where the client had asked me before, okay, why are we talking about this now at the end of the audit? We're just about to issue. It's like, oh yeah, I get it. So I'm able to have these conversations now where, okay, we've had all year, which is not your busy season. So there should have been time. I mean, I realize everything's cramming in here at the last minute for everybody, but we've had all year to talk about some of these issues. So let's try to plan a little bit, be a little more proactive. So I'd say the more that happens, and the more heartburn accumulates, over, a couple of years, that happens a couple of times, you're going to want to move on or think about moving on.
Yeah, it makes sense. I mean, you think about the desired outcome of an accounting relationship. You want them to manage risk and bring stability.
Right.
And if it seems to be adding risk and adding instability, right, that seems to run counter to the purpose of what you're trying to do. Right. And you can appreciate if somebody's going to be hit with, on their personal taxes, an additional $10,000 tax bill. And by the way, you're finding about that on April 13th. That's a little bit frustrating.
Yes.
And can be financially challenging, right? Or if you find that you've been telling everybody, all your stakeholders, you're expecting a massive profit this year, and then 5 days before the audit issues, you got a massive write-off you got to take. Right. That's an issue too.
To be fair, accounting is historical.
Yep.
So, the end result is based on what happened. So, I can't tell you what the answer is going to be in June for where we're going to be in December, but I can tell you, okay, here's where we're at in June.
Yep.
What are your plans for the rest of the year? So we're not going to have any surprises. Remember, we talked about this. If you were going to buy that building, if you were going to do that acquisition, if you were going to, launch a product or not, or make a decision about launching a product or not, or changing up the C-suite. Those are things that could affect and change the end results. So let me know what those are now. Let's discuss, and let's head those up at the pass. Versus on April 15th or March 15th or 16th, I think is the deadline, is, oh, that's what happened. Okay, well, that changes everything now. Right. So your answer is completely different. So, and it's the first I've heard of it. So again, I think being proactive with communication, in my career, keeping the number of surprises down, with your client is the best preventative action to an upset client or client wanting to move on.
Yeah. Yeah. So let me ask this. Accountants aren't cheap. I mean, I guess some are, but most aren't. You're not cheap. I'm not. My firm is not cheap. The firm we used to work for really isn't cheap. Is it unreasonable for a client to demand perfection or near perfection?
Yeah, I was going to say perfection. Perfection can be subjective.
Yeah.
Especially, and you know this very well, that this business can be somewhat of an art. the answer on a tax return that's acceptable to the IRS could be different from the same exact return prepared 2 or 3 different ways could be acceptable to the IRS.
Yep.
So which one is perfect? Probably the one that, as long as it's acceptable, has the highest refund. But I think that especially in your business, and I know you're saying you're not an accountant, but your business certainly involves numbers.
I'm certainly in the accounting industry. I work for an accounting firm. So,
right. So, I would say that, relatively perfect. We're certainly not perfect, but I would say that, generally and materially perfect, is a reasonable expectation. But you also have to understand, kind of where you're at. So if you have the wrong person in place, so if you've got highly complex transactions and you're asking a bookkeeper to book those transactions perfectly, and they involve estimates and they involve a lot of inputs, I would say you shouldn't expect in the first place, perfection, from that type of that level of service provider. But if you have a bookkeeper, at the lowest level, the transactional level, I would say where there's not a lot of judgment, there's not a lot of art,
right. It's just a mechanical process.
I would say that, you could expect something close to perfection there.
So is changing an accountant easy? And let me put some parameters around that, because I know that this is very much a big it depends answer. But let's say there's already been a 5-year relationship. The accounting firm is helping both in the tax and maybe the financial reporting side. How hard is it to change accountants, and what is your existing accountant's obligation to facilitate that transition?
It's becoming easier, with your accountant having the documents that are yours, source documents, things that you own, but they're using to perform the work. I think technology has enabled, the facilitation of transmission of documents from one place to another. I know that in the past it was difficult, especially like if you hadn't paid your bill, to your prior accountant, or it was an adverse relationship, it was a little more difficult to get all your stuff, which you really should have anyway.
Yep.
And that would be my suggestion, is just as a best practice, is to, anything that your service provider, your accountant prepares for you, or documents that you provide them to prepare either a tax return or audit and whatnot, keep files of those yourself. Don't just let them keep all that stuff. They stay as organized as they can, but it may not be exactly what you need in order to transition. So I see a lot of heartburn, heartache, and gathering documents that you just don't have on file. Your old accountant, my old accountant has that. Or all the journal entries that were ever booked on my books, I don't have them in my QuickBooks.
Right.
My accountant has all of my journal entries that fix all my books for the last 5 years. And they just rebook those every year. Well, we got to go get that from them. Well, just get those every year from your accountant.
So make that part of the deliverable.
Yes. Yeah. Yeah. I would say that technology is enabling, better transmission, because those documents would be available there for you to log into your portal. And a lot of firms are doing that now.
So what are some instances where a client might be thinking that they want to change their accountant, but really at the end of the day, it's really the client's issue, not the accountant's issue, that the client is just being unreasonable, and the client needs to kind of wait a beat and take it down a notch?
There's certain circumstances where, clients will just, it's always a fee issue. So it's never going to be cheap enough for what you're getting. And then second is the information and effort that is often required on the client side. You're just never going to get it. So it's like garbage in, garbage out. Well, you're not getting my tax return done. We're not getting through the audit. Well, we're not getting what we need as service providers in order to, complete the task. So if you give us garbage, we're not going to give you garbage back. You're just going to get nothing. So I would say, clients that get hung up on price and then don't deliver on their end of the bargain.
Okay. So, and then I think you're kind of touching upon this, are there sources of client unhappiness that they don't realize is just, there's certain things a client has to do to make the relationship work. And even though they may not love doing it, that they just have to understand that's part of the process. For example, in one of my assignments, I asked for a lot of data.
Sure.
And I don't apologize for that. I asked for a lot of data because earlier in my career, I've given the surprise to the client, and it's because I didn't ask for the right data up front, because I just, they're not going to have that. Doesn't matter. And then it turns out that had I asked for that 45 days ago, my answer would have been radically different and right. As opposed to wrong, basically. So I don't apologize for that, but I can also, I know, and I sympathize the fact that sometimes the client is overwhelmed by the data, what looks like a very burdensome data request initially, because they think that they start to think, well, who's working for who, right? Does that phenomenon occur in your side of the house too, in the conventional accounting world?
Well, that keeps me in business.
Okay.
So, I do audit support.
Yep.
And basically that's a function where I sit between my client and the auditor.
Oh, okay.
So I facilitate all of the requests that the auditor needs from the client. So I'm kind of the buffer in between that takes the burden. My client, and their personnel are still have to pull documents, but I kind of bat down things. I make sure that, the documents are really needed, and kind of temper the list. So yeah, it's definitely an issue, and it can definitely be overwhelming. And, it's certainly generated business for me, and it's a need out there.
How do you figure out if, as you said, nobody's perfect. I'm not perfect. I know there are deliverables I would like to have back in my career and have had to take back and fix them. At what point do you decide, this advisor just made a mistake that I just sort of can't live with? How do you kind of come to that conclusion that a mistake, or maybe a series of mistakes, I'm not sure if there's a difference there, but rises to the level that, you just got to make a change? Is there any kind of rule of thumb that you have, or a trigger point, or a threshold that you cross? You say, you know what, this goes beyond the normal bumps and turbulence of an advisory relationship.
I would say on the audit side, the ultimate would be a misstatement. So a financial misstatement. So something that the auditor didn't catch that they may have known about. And I know we may talk about, accountant liability, but I would say that if the financial statements are materially misstated and your auditor signs off on it, that would be large enough to really, really consider making the decision at that point to go with another auditor.
Okay.
I can't speak so much on the tax side, but I would say that frequency has something to do with it. Some of my clients who, I don't do the taxes, but they have tax providers, and if they're seeing IRS notices often, that means that someone is not being proactive. So I think the frequency of IRS notices and issues there can certainly weigh on needing to make a change and needing to make choose another firm.
So, one thing I've noticed that you have not talked about specifically is firing your CPA because the tax bill is too high, right? We talked about surprises,
Sure.
right? We talked about mistakes, right? But I think, and I have seen that there can be a client tendency to blame the accountant because they've discovered that they're going to have to write a bigger check to Uncle Sam than they wanted to. They don't have the IRS to strangle in front of them. So their tax preparer is kind of seen as an extension. So what I'm curious about is, have you seen that? And, is there a point where maybe the accountant isn't doing enough or hasn't made enough of an effort to, quote, optimize tax liability? And how does that in your world kind of play in terms of how you consider that dynamic? We only ask hard questions here on this podcast.
I have seen it,
yep.
And I've seen plenty of tax accountants fired because the tax bill at the end of the day was hefty, and that occurs for various reasons. And I think maybe we come back to communication and the expectations of the client. So. And also how you communicate with your client.
Yeah.
So if your client is big picture, if they don't read paragraphs and paragraphs of an email where you lay everything out for them, understand your client. Understand how they consume information so you can get the point across. So I may say, hey, if you do this or you don't do this all year long, we're going to have an issue on April 15th. But they may not read that, and maybe that's not their fault. Maybe that's just not the best way to communicate with your client. So I would say just expectations, no surprises, and find out how to communicate with your client about those things would avoid the real surprises. And have your client, I know I'm speaking from the service provider side. I'm trying to go from, looking at our service providers.
Yeah. Well, I mean, you've been on both sides of the fence, so that's why I have you here, because you can speak to that.
Yeah. So, from the client side, demand a proactive approach and tell them how you want to be communicated with, especially when it comes to surprises. And, from the service provider side, do the same.
That how is really interesting. I want to kind of pause on that, because I don't think I've explicitly reflected on that enough, or even pushed on that. We've had a lot of advisors come on the program, and the theme of communication in terms of a successful relationship comes up a lot. But what hasn't come up is how you communicate, right? And
right.
That leads me to think, in my own personal experience, my wife is terrible with physical mail. If you send her something in the mail, she just will not read it. In fact, I have to bring in the mail to make sure that our mail gets read.
Right.
And if we have jury duty or a subpoena or some, bill or something, that it actually gets taken care of, because my wife just flat out won't read it. And we wound up firing a service provider over that, because they didn't communicate with my wife about something that needed her attention, but they solely relied upon physical mail, which she never reads.
Yeah.
And they did their best to communicate. They met their obligation, but they didn't take the temperature of their customer well enough to say, okay, are we communicating in a way where they have the radio tuned to the right channel to receive it? And that's a very, the point you bring up there, I think that is so critical. It's not just about communicating, but communicating the right way.
Yeah, exactly. And you and I, we've been through some leadership courses together.
Yep.
So you've got emotional intelligence. I'm sure you've heard of that. The DISC profiles. There's all sorts of different versions that kind of have 4 quadrants usually, and kind of put you into, different boxes. Sometimes that's, social, how you deal with things socially, and then whether you're detailed or a high level type person in your decision making. So, if you've got somebody that's very high level that makes decisions quickly, usually, higher levels of leadership, they have to act fast, they're decisive. They don't need as much detail to make their decisions. So you give that information to them in bullet points, as opposed to a long narrative with all the details. Some people require high levels of detail in order to make decisions or feel comfortable. So those are just kind of two quadrants, and that of people, and how you would deal. Either you should consider. Actually, I worked for a firm for a brief stint. And I know of at least a couple of firms that actually have their clients do the surveys that, give you the results of what quadrant you're in, where your emotional intelligence is, what you require as far as communication. And every time they get on the phone with their client, they kind of look at their profile first, or even send an email to make a decision about how should I communicate with my client, what I expect from them, what needs to be done. So I think that's interesting. I mean, I don't employ that currently, but I think it's a good idea. And I try to at least get a read on how my client, consumes information and needs to get it.
Well, and even the communication channel itself, right? I mean,
the medium. Yeah.
My oldest son who's about to turn 18, I can't get him to read an email, right? But he'll respond to a text. Yes. He'll respond to a Slack. He'll even respond to an Instagram. And that's kind of interesting. You want something creative, yell at your teenager with Instagram. There's so many options of angry pictures visually, that you can sort of send and things that depict being left dead in a ditch and things of that. So it's actually quite liberating. Gives you a sense of being creative as a parent, basically. But even, I have clients that run the older, not that many. Most of my clients are 35 and younger, but the older ones, for anything in depth, they still want a phone call.
Yes.
Right. But then the younger ones, don't, or they want to do a video conference, which I'm embarrassed to say, because I pride myself in being a tech guy. I am still getting used to doing the video conference thing because I've got an ugly mug and I don't dress in a suit every day.
Don't say that.
And there have been times where I realized, shit, I've got a video chat in 5 minutes and I still have my Christopher Walken, I need more cowbell t-shirt on. Right. I'm in trouble. I don't need to have pants on, but I got to have a shirt. Yeah. But that's sort of a reality of learning how to communicate the right way with the client. Because if you send the message to a non-receiving medium, you really don't get points for having sent something that the client has no realistic chance of receiving.
Right. Well, so, when I manage large audit teams, working, so I guess I'm an Xer. I'm very close to millennial, but I think I'm still categorized as Gen X. The most effective way for me to get an answer was to pick up the phone. Yeah. That's the most effective and efficient way. But as my clients have become younger, and I guess as I have gotten older, I realized that, I would harp on some of my staff, when I was, an audit manager. I would say, just pick up the phone. Just call them. Don't send, an elaborate email. Just pick up the phone and get the answer. That's the quickest way.
Yeah.
So we can move on, and don't, send the email, then leave for the day and just, be able to clear your mind that way. Let's just get to the issue. But now, a lot of my clients would prefer to receive a text or an email. Right. So, I've aged out of my communication method. So I need to keep thinking about my client's preferred communication method.
A lot of younger people don't even have their voicemail set up.
Right.
Right.
Yeah.
And they won't, let alone return one. They'll see a voicemail, they'll delete it because they'll just assume if it's that important, you'll just call back.
Right.
So, let me ask this, accounting, like so many services, is a competitive field. Let's say I'm not necessarily unhappy with my accountant, but I meet somebody else and they want to kind of work their way in and see if they can knock the incumbent accountant out. That happens.
It does.
And as a client, how open should I be to that? And even as a client, should I see that as kind of a little sketchy? Is there kind of turf there or some professional courtesy that's being violated, or is this just sort of big boy football and that's the way it works? And an incumbent always has to remain competitive and assume that somebody else is trying to knock them out for their business. How do you think about that?
So CPA firms, accounting firms are businesses.
Yep.
So there is a degree of marketing that you'll see, and there's business development. Otherwise, an accounting firm would have no clients if you didn't reach out, if you didn't create a network. the direct approach is fine. I would say don't waste too much time. I mean, listen to what they have to say. And if there's something that they say that makes sense, that piques your interest, continue the conversation. But it's more of an unspoken, if you feel like it's just a sleazy sales pitch, I would say don't waste too much time with it. But I think if it's a thoughtful approach, and if you're in a genuine conversation and they seem to understand your business somewhat, and you think that there might be something that they could add to it, I certainly have the conversation.
Now, let me change gears here, and this will be, I think, the most uncomfortable question I'm going to ask you all day. And that is, as we've talked about, mistakes happen. In your mind, where is the line between a mistake, stuff happens, people are not perfect, and then you have to start thinking about, was there malpractice?
I think that it's a matter of severity, materiality. As accountants, there's certain guidelines that we have to follow. When it comes to an audit, it's, we're auditing under GAS, which are auditing standards, the generally accepted, accounting principles. So we have to stay within the confines of those. And if there's a big material miss there, then, that's an issue. I would say that, whether you know about it, if you knowingly, so as an accountant, whether you knowingly look over something that's material, that could be considered a crime.
Yeah.
So, I think that would probably fall more heavily into malpractice. If there's a misrepresentation, that's intentional, that you're deceiving, or skirting. Maybe it's not your client, but you're helping them skirt a loan covenant, meet earnings, something like that. I would say that falls along the lines of malpractice. Is that a good answer?
You tell me. I think so. What you're talking about is understanding kind of what professional standards are, right? And is the mistake big enough that it costs the client a lot of money, basically? That's
usually,
and is it something that they should have caught, right? Yes. Had they been doing their job, correctly? Right.
And then even if they don't know about it, were they negligent? So were they just not following the rules and negligent in the performance of their services to not catch something material?
So, when your client is thinking about maybe changing accountants, what is do you advise a client to maybe try to do something to salvage the relationship? Maybe is it a conversation or different kind of engagement parameters, or maybe you talk to the accountant instead and say, hey, look, we got an unhappy client. You got to kind of fix these things. But are there precursor thought processes that you would recommend if you're thinking about changing accountants before you actually pull the trigger and do it?
It should not be a knee-jerk decision.
Yeah.
So, in my experience, and me, I often find myself in the position of a mediator.
Yep.
So I see.
Which you're good at.
And I see both sides, and people for some reason kind of open up to me. So I'm able to see different perspectives. Now, in some cases, I'll give people the benefit of the doubt to my own detriment, but I can see where someone is making a knee-jerk decision or wants to make a knee-jerk decision based on just, one thing that went wrong.
Yeah.
So, we're coming down to the wire, getting the tax return done. It's rush. It's high stress. People want to make a knee-jerk decision just because of the pain in that moment. Let's step back and look at the entire relationship, just because, it's high stress right now and we may miss a deadline. What else is this firm doing for you? And then at the same time, I can talk to the firm and say, my client is really having a heartache with these last minute decisions and always coming down to the wire on the audit. Is there something that we can do or something that they're not doing, that can make your job easier? So let's at least have these conversations before we make a decision to part ways. So I think it's worth it to just step back before you just make a decision based on, one event.
So we're running out of time, and we can't cover sort of every possible scenario. But if one of our listeners is kind of thinking about whether or not they should be changing accountants, could they reach out to you? Would you be willing to help them out?
Oh, sure.
What's the best way for them to contact you?
You can either ping me directly at brian.woodman@woodmancpa.com or info@woodmancpa.com. You can reach me those ways. And
so somebody actually reads info@woodmancpa.com?
Yes.
Okay,
yeah.
good.
I think they all go to the same inbox.
Well, I'd like to thank Brian Info Woodman for just so much for joining us and sharing his expertise with us today. We'll be exploring a new topic each week, so please tune in so that when you're faced with your next executive decision, you have clear vision when making it. If you enjoy these podcasts, please consider leaving a review with your favorite podcast aggregator. It helps people find us so that we can help them. Once again, this is Mike Blake. Our sponsor is Brady Ware & Company, and this has been the Decision Vision Podcast.